Hello, everyone. Good afternoon. My name is Yana Kopera Harris, and I'll be your host today at our seminar or webinar session on the taxes when buying in France. As you know, we couldn't hold this session with my guest, Malcolm, due to technical difficulties last time. However, I have managed to pin him down and invited him again to host this session as we've got plenty of questions that were asked, and we feel responsible to find an answer to some of your questions. So, Malcolm, hi, how are you doing? I think you're on mute. There you go.
Very well indeed, and yourselves?
I'm good, thank you. We've got several people joining us today, and we've got some questions to get through. But before we get to answer some questions, I have put up a little slide about you. But I know you are what the definition of an expat is. You've traveled around the world and lived in different countries. Do you want to tell us a little bit about you and what you're doing today as a wealth manager?
Yeah, of course. So I came back to the UK after 20 years abroad, and back about two years ago, just one. I've lived in 7 different countries now. 6 of those I was giving financial advice and helping expats. So I've been there, done that, got the t-shirt, torn the t-shirt up, and thrown it away again. So I'm all I want to say is that I understand what you guys are going to be going through by moving to France and moving to anywhere else in the European Union for that matter. So I'm looking forward to helping you in any way I can, because I've been there and done it, and I can help you. So that's pretty much my background. Those countries include everything from Bulgaria, Switzerland, Holland, France, Germany twice, and a couple of others as well, so outside the EU. So yeah,
Truly international, then.
Yeah, that's right. So happy to help you guys. A lot of my clients are pretty much all over France. So there's a lot of Brits in France. It's like second to Spain in that regard. So and more people are moving to France. So it's something that comes up an awful lot. People have concerns about the tax. Tax in France is a very complicated thing in some regards. It's very simple in others, but it's a high tax jurisdiction, and you just need to be aware of that and aware of the pitfalls, and you need to be organized when you arrive so that you don't pay extra tax just through ignorance. So that's basically, and it's the same for any country that you go to, but you need to get your ducks in a row in terms of your finances before you come, rather than once you arrive.
Correct. And last time on the last session, when you couldn't join us, I actually went through an overview of the different taxes you might be faced with.
Yeah.
When either buying property in France or moving there permanently. If just want to remind to our listeners, we have an opportunity. You have an opportunity to ask a question by pressing the question button at the bottom of the screen. So feel free to ask questions, and I will kickstart with some of the questions that were asked last time. And I unfortunately couldn't answer because I am not a tax specialist per se. So, Malcolm, we had a question from Claire. This is particularly related to movable tax. If assets, i.e. funds, are released or cashed in before moving to France, will they still be taxed? And is the movable tax on items not held in France applicable?
Okay, so that's very simple. If you have cashed in assets and they are sitting in cash when you move to France, then you are not going to be paying tax on those again. If you then invest those assets again while you're tax resident in France, then they will be taxable. And there are ways of reducing that tax. But if you've already cashed them in and then you move over to France, there's not going to be any tax to pay. Just be aware that when you do move large sums of cash from a UK bank to a French bank, just be aware that obviously you'll go through the usual know your client questions, KYC. They just want to check where the money came from. Very rarely will they ask to see proof that you've paid tax on it. But just be aware that you could be asked that under certain circumstances, depending on the amount. So no, you will not be taxed twice. There is a double tax agreement between France and the UK, but there are specific things on that double tax agreement. Some things are covered, some are not. Okay. In terms of the movable tax, no is the short answer to that one. Yeah, it's about your movable items that are in France, not about the movable items that are sitting in the UK or anywhere else for that matter.
Okay, that makes sense.
Or painting sitting in the UK, not an issue. Okay.
Yeah, that makes sense. I mean, we've got one live question as well asked. So I think you already answered that, but just for the clarity, if tax is paid on earning and an income in the UK, is it taxable in France also? So this is double taxation conversation, really.
Yes, that's right. Yeah. So which question was that?
That just came up from Johnny. That's the last question.
So yeah, so there's there is no, you're covered by the double tax agreement there, so there's no issue in that regard.
Okay, perfect. We have got a question from David, which is quite specific, so I'll try and remove too many personal circumstances. But generally, if you're still self-employed and you both work online, which is a really new trend right now, you know, people work online and work for different companies overseas and reside somewhere else. Is there a way of getting taxed in the UK and still living in France? And there is also, have you heard about dual residency? Does it actually exist with France?
Yes, so dual residency is possible but complicated. Yeah, so it's very much on a bespoke kind of situation. Depends on how many days you spend in France. As soon as you spend more than 183 days in France, you are considered a tax resident in France. You're considered a tax resident in France. If you have economic interests in France, they can argue that you're a tax resident in France. So it's a little bit smoke and mirrors when it comes to that. But if you're spending over 183 days in France, then they will consider you a French tax resident. Simple as that. And then what will then happen is if you've got, if you want to have taxes that you want to pay in the UK, that becomes a very difficult thing to do because you've spent more than 183 days in France. I don't know exactly what your personal circumstances are, but if you spend more than 183 days, you're paying French tax. It's as simple as that.
Okay, so even if you're working for a UK company online and you are logging in from France?
Yeah, if you're based in France, that you're paying French tax.
And the key takeaway from there is 183 days.
That's the key. That's what they'll measure it by. Yes.
Okay. Understood. We had a question last time from Edwin about pension wealth. How is that treated in France?
Okay, so that's very simple. So there's absolutely no tax on the growth of your pension. Think of your pension as sitting inside a safe wrapper. It will grow completely tax-free, whether that's a French pension, whether that's a UK pension. Okay. As soon as you start drawing down on the pension, that's when the French authorities will start getting interested. Okay, so then it will be subject to income tax in France, depending on which banding you fall in, and so on and so forth, which was in the presentation. So that's it. So it will not be recognised as part of your wealth. It is your pension. That's one of the advantages of having a pension. But you will be taxing it as soon as you start drawing down on it.
Because it turns to income, right?
It turns to income, and you'll be subject to income tax in France.
Understood. Well, I understand it. Thank you very much. It was very clear and simple. We had a question about investment bonds. If you derive an income from bonds or any other of the investment vehicles out there, and they are below the minimum tax threshold in the UK, can these be taxed in France once they move to France?
Okay, so investment bonds in France are, so if you have an investment bond in France, sorry, in the UK, and you come to France, then it will be subject to tax in France. Okay, when you say investment bond, I'm assuming you mean an assurance bond or capital redemption bond. So if that's the case, then yes, it will be subject to tax in France. Yes, and even if it's below the minimum threshold in the UK. Okay, and the way that tax works is you can choose between income tax, or you can choose between, or you can have the flat tax, which is the often referred to as the PFU, and that is 30%. But you have a choice between the two. So in this case, you wouldn't go for the PFU, you'd go for the income tax, because you would be you wouldn't have any tax up to, I think it's 10,200. So that's how that would work. But generally speaking, if you've got money sitting in investment bonds and you're moving to France, then it can get quite complicated. You and me need to have a conversation, because it depends how much you paid into that bond and when you paid it, as to how much tax you'll pay. So on the money that's currently in there. So that's a conversation for another day. Can't really go into that now, because it's beyond the scope of this.
Personal circumstances really
yeah.
and I believe I stressed that a lot. That personal circumstances are something that determines what you're actually liable for. We have a live question from Kevin. So sorry, you know, I'm gonna cut you off guard now, but we have got a question from Kevin, and there's another question to clarify something about 183 days. Or this is relating in the receiving a pension from the UK now as part of early retirement, and you pay a tax in the UK. Will you pay the tax on this on a French side when you move?
Okay, yeah. So the way that works is, if you have moved, after you've moved and you've moved to France and you are taking an income from a UK pension, then the way that works is, initially you will be paying tax. You'll pay the UK tax, okay, and then you make up the difference in France. You will then need to fill in a form that says that I don't need to pay the tax in France. I am now tax in UK. I am now resident in France. And that takes a few months to set up with the French tax authorities. And then what will happen, it will go to you gross, and then you'll pay the tax in France. Okay, that takes a few months to set up. So when you move over, what will initially happen is there will be tax taken off in the UK, and then you make up the difference in France. But as soon as you do turn up in France and you're a tax resident in France, make sure you fill in the documents, and I can help you with that. That make sure that when you're paid your income, you pay the tax in France and no longer pay the tax in England.
And you mentioning a difference in percentage charges, or what is the difference that you are mentioning?
So no, I mean, look, the problem that you've got since Brexit happened is that HMRC have started behaving very badly. I think I mentioned this in the presentation. And what they've been doing is slapping on an emergency tax code onto people's UK pensions when they draw them in France. Okay, so that's happened 3 times last year to my clients, and I can't think that's a coincidence. Yeah, so the clients then had to go and make up that difference in France and make an application in order to do that. That took like 3 months for them to get the money back. Okay, so there is, remember, in terms of the difference, it just depends how much money you're earning. If you're going to pay income tax in France, it just depends how much money you're earning and what tax bandings you fall in. Yeah. Generally speaking, if you've got a low income in France, you're paying slightly less income tax than you would do in the UK. But if you've got a higher income, you pay a lot more tax. That's generally how it works. But you'd need to look at the income tax bandings that I put on the presentation. And another thing with regard to the income tax bandings, they are changing, and they change every year. And the French put them up a little bit every single year, in line with RPI, so inflation. So just bear that in mind.
Yeah, well, no wonder they do protest quite a lot in France.
Yeah. the tax in France quite a lot.
I have got one clarifying question from Johnny in relation to. So we mentioned these 183 days. If you're 183 days in most countries, you are becoming a tax resident in those countries. I think it applies to many examples, but France too.
Right.
But if you want to leave, how long do you need to stay out of the country before to avoid the tax liabilities before you return back?
It's usually 6 months, but
Okay.
it depends. Yeah, it does depend. It's usually 6 months, more than 6 months.
And I take it the stamping of the passport is very important with this.
Indeed, yes.
Something that we are not very used to, but after Brexit, I think we're getting back to used to getting the stamps on in our passports. But I understand from my own perspective of being an expert that this is a really important part of traveling in and out of the countries for residency and tax purposes. You must get your passport stamp because that's your evidence that you left or that you came back.
Correct. Correct.
Okay.
But they're
And
still stamping passports, as far as I'm
yeah,
aware.
oh yeah,
They're-
I think it's now becoming more popular
yes.
because of the 90 days of rule for the tourism.
Yes.
Um, there is a question about buying a property. Um, there is a question about particularly including your children on the purchase on the deed. So if we buy a property in France, would it be advisable to place the ownership names to include our children? I suspect it leads to inheritance tax.
No, listen, that's not going to help you in any way, shape, or form. Okay, if that's a way to try and mitigate inheritance tax or things like that, that's not going to work. The French authorities are not stupid. If they see that there's children's names on the deed, it's still going to be subject to inheritance tax in France if the parents die in France and are tax resident in France at the time. So that's not going to be a way to get around that. Okay. And the gifting laws in France are much worse than the gifting laws in the UK. So you can do a gifting to your beneficiaries, to your kids, and then it's outside of inheritance tax in the UK in 7 years. In France, it's 15. Okay, so it becomes a lot harder thing to do. So you would need to give them the money really quite early in order to get out of paying the inheritance tax in France. There are ways of getting out of avoiding inheritance tax in France. Yeah, it's very easy, but that's not one of them. Okay, so if you want to do that, talk to me, because at the end of the day, inheritance tax is a voluntary tax that you pay if you don't like your kids. Right? It really is that. I mean, and it's not something you can do on your deathbed. It's something you need to organize beforehand. But there's absolutely no reason for anyone, as long as they're organized, to pay either UK inheritance tax or French inheritance tax. Yeah, you can mitigate it very easily just by setting things up and having the right providers and having the right structures for that. But you can't, as I said, you can't do it on your deathbed. You need to be organized.
It's definitely something people need to think about at the time of acquiring assets.
Yeah.
However, there is a question which we already had asked before. If you didn't get organized, in reality, a lot of people don't. Does your spouse pay an inheritance tax in France?
Absolutely not. No, it's only when it passes generations. Yeah, so if whichever one of the spouses dies first, that gets passed on to the surviving spouse. It's when it passes on to sons and daughters and so on, that's when it's subject to inheritance tax in France.
Okay, well, we've got some questions about the rates and the amount. So I asked my colleague to get the presentation up so that we can look
Yeah.
at some tables with inheritance taxes and the banding.
Yeah.
We also have an income tax question, so that will be quite good one. Tell me if here we go. So the question is, what amount does inheritance tax start? So I guess this explains it for itself, but Malcolm?
Yeah, so basically inheritance tax in France is a lot more complicated than it is in the UK. However, it basically starts after 100,000 euros. So it's on that sliding scale, as you can see there. I won't run through all the numbers, but you can we can send that to you afterwards if that's something that you want. but it's over everything over 100,000 basically, and then it's on a sliding scale thereafter. Okay, so the obviously high net worth clients get hit a lot harder than lower net worth clients. Okay, so so that's basically how that works. It is a lot more odious than UK inheritance tax. Okay, so if you've got a property in the UK, for example, and you're married, you can get up to 1 million relief as it currently stands. But in France, it doesn't work that way. So yeah, just always think that France is a high tax jurisdiction, and I need to get my ducks in a row before I go. So that's one of the things I can help with, for sure.
Okay, perfect. The property tax. I think we do have a slide on a property tax.
Yeah.
Back, yes, is it not real estate wealth tax?
Okay, yeah. So property tax, interesting. So the way that works is it's on worldwide property. Okay, so if you leave property in the UK and come to France, luckily that's not taxable for the first 5. And the way, just to explain a little bit better, the way those bandings work is you don't really have to worry about the real estate tax until you're over 1.3 million in the value of your property. So that banding that you can see there between 800,000 and 1.3 million, that's you're only subject to that once you're over the 1.3 million. Okay, so if you've got a property that's over 800,000, it's not going over 1.3, and then it's only subject to the amount between the 0.5% between 800,000 and 1.3 million, and then it goes upwards from there. Okay,
so it's a difference.
Yeah, and it's done on current valuations, yeah, not historical valuations of the properties. So that's kind of estimated and done on a annual basis. Okay, so just bear that in mind, that you won't be able to do it on a historical value of the property or properties, for that matter.
Okay.
Yeah, it's worldwide. Yeah.
And I think Neil, who's currently listening to us, is asking questions related to this, whether the amount is per person or is it for both owners, or how is that?
In terms of real estate tax,
I believe so. I might be confused.
Yeah, so it can be both. So if the properties are in joint names, then it applies to both of you. So it's just a straight 0.5%. So but if it's in a single name, then it's it's the same whether it's joint or both. Yeah. Okay. So just be aware of that. Depends what's sitting on the deeds.
And we did have a question about how our property is valued. So can you highlight that again for this international tax purpose?
Yeah, so that will be valued by an independent third party, and that's usually done by the French authorities, who then issue a third party to do that. That's not done by the authorities themselves. So that's how that gets.
And it's a current market value.
Yeah, current market value, current estimated market value, and of course you do have the ability to contest that.
Okay. So and a question relating to this real estate wealth tax or international property tax, does it only come into play on the equity you own now, or is it the total value of the property? So I assuming that there is a suggestion that you can have a mortgage.
Yeah, so it's on the total value of the property.
Okay.
Yeah, they don't care whether you borrow money for it.
Okay, makes sense. Perfect. Then we have got some questions on importing cars from the UK. Is there a particular import tax?
There is, yeah. So there's a 10% import tax plus VAT, but just bear in mind the way that works is that will only be on new cars. Okay, so if you're bringing old cars, when I say old cars, anything more than 6 months old, then you're not going to have that. Excuse me, you're not going to have that problem. You just import the car and you register it in France. Okay, but if you're bringing in new cars from the UK, or you buy a new car and then you bring it into France when you do your move, if it's less than 6 months old, it will be subject to the 10% customs duties tax plus 20% VAT. Okay, so just be aware of that. If you're already tax resident in France and you're going to buy a second-hand car in the UK and bring it over, yeah, if you're already tax resident, then that will also be taxed. So just bring them over when you move. Yeah, it's as simple as that. Don't buy cars after you're tax resident in France. Just move them over, get them registered. Happy days.
Excellent. That's great advice. Thank you. We also have a question about setting up a French company for tax efficiency. So if I'm still resident in the UK, but I have a French rental income, so we could consider somebody's running Gide or bed and breakfast or generally renting a property, should I consider setting up a French company?
No, not if no, that's not going to work, because they're going to come after that tax as you as an individual. They will see that as you trying to avoid the tax. Okay, there's nothing to stop you setting up corporate entities in France, of course, but yeah, that probably won't. That's not going to work. Yeah.
Okay, that's a straightforward answer. I hope we answered that question correctly. I still have got. Perhaps we switch to income tax as well for individuals, because there is a few questions we had been asked last week. Drawing an income from interest on investments in UK bank, do these get taxed, and are they falling into this table?
Okay, yeah. So if you're going to be drawing on an income from a UK bank, is that what the question was?
Correct, yes.
Yeah, okay, yeah. So that will be taxable in France, yes. And it will just be normal income tax.
Okay.
Yeah, so that's basically how.
And an income from investments in the UK?
Income from investments. That's on one of the slides on the presentation. So that, yeah, if you've got income from investments, then the way that will work is it will be basically subject to the 30% tax or income tax, depending on your choice, which one you want to go. Do you want to do the flat income tax, the flat tax, the PFU, or do you want to do it on sliding income tax scales? Yeah, so that's how they will get you on that. There are ways to mitigate that, okay, which I'm happy to have conversations about. But if you've got your investments sat in the bank in the UK and you're withdrawing income on it, then that income will be subject to tax in France. Of course it will. Yeah. So so that's basically how that will work. Yeah.
Okay, so you have choices there.
Yeah, you have the choice: the PFU, 30% flat tax, or the income tax.
Okay, excellent. Well, we have filled almost 30 minutes again, even though we've gone through your content that you put together last week for us without you. But thank you very much, Malcolm. This has been very, very helpful. I think we've grouped some of the questions together from last week and answered a lot of these. But thank you very much to my audience and listeners. I think this has been really good that you could join us. And Malcolm's details are on a screen should you wish to contact him. We will also send you an email with the recording should you wish to re-listen to some of these answers. I appreciate they are really, really technical. Everyone's circumstances are different, so I apologize if we didn't cover your own personal circumstances. Please feel free to reach out to Malcolm. We do have a virtual event on the 26th of March on a Saturday, which is open from 8 to 5 p.m. on Saturday, and Chase Buchanan will have a number of advisors present and will be running several presentations related to different countries and different taxes, inheritance taxes and income taxes, and becoming an expert in those countries, as it's very, very complicated matter, which just became more complicated with Brexit. So do come and join us, and please ask questions. We are always aiming to answer the questions live. If we don't answer them live, we will come back to you in writing. And if you do have more questions after this event, please feel free to email us directly if you wish, which is at info@youroverseashome.com, or you can contact Malcolm indeed on malcolm.mcdowell@chasebuchanan.com. Once again, thank you very much for joining us today for the repeat of the session, and I really appreciate your time. Thank you, Malcolm, as well.
Thank you.